Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, June 7th, 2019. Interesting day in the markets. We had, I'll get to some of the levels in QQQ and SPY here in a second, but we had a decent lift, some more upside on the indexes, really the large caps. Small caps didn't sort of lag behind. I mean, they were up today, but IWM closed up 0.71%. QQQ up 1.93, that was the strongest, and SPY up 1%. And again, it's these divergences, those divergent lows that we put in on the 60-minute charts have certainly played out. And we hit my maximum upside bounce target today on SPY. So that puts me, I don't want to call it all in short, but added some more short exposure, and that's a level that I plan to add up to. I'll get a little room left on QQQ. I'll get to that chart in a second, but let me show you what's happened on the futures. We'll start out here. So we had these wedge type patterns forming recently on ES. This is the S&P 500 E-minis. If I don't make mention, sometimes I'll forget to tell you what I'm talking about. It's usually up here in the upper left-hand corner. So this is the ES hourly chart. S&P 500 futures, and you can see that basically all we've done is extend the divergence lines I talk about, and I mentioned in a video to members today. You have the uptrend line. Now this is technically significant as far as this is the level that you want to trade off of. You buy pullbacks to an uptrend line, or you wait for a breakdown below that triggers a sell signal. The upper line isn't a trend line per se. In my book, well, first of all, trend line is going to show you the uptrend in price. This is just a divergence line. It always takes, I say, 3 reactions to form a trend line. So when I have a wedge, or in this case, it's now a price channel, it's at the upper divergence line there is simply that. It's a divergence line to show you, I'm trying to get it perfect there, and it's almost a parallel channel. Down below, here's the PPO. There's your negative divergence right there, still intact, as well as on the RSI. You have equal highs on the RSI versus higher highs in price. And so that's ES. I mentioned in the trading room just before the close a little earlier today, we had some bearish pennants, and I shared my thoughts on that. I'll show you here. A bearish pennant looks like this. You have a sharp move up. Some of you might be familiar with bear flag or bull flag patterns. Did I say bearish? I meant to say bullish. Okay, bullish pennants, and they're similar to a bull flag. Now we may have a bull flag going, but I said I'd put very good odds that either it breaks to the downside, or if it pops to the upside, it's going to fail. What they look like, here, let me find that chart for you. Okay, here, this is a bearish pennant right here. It takes the form of a pennant, obviously. And you have two things, just like a bull flag pattern, you have a flagpole, a sharp move, almost unidirectional, near vertical move up. It's got to be impulsive. Then you set up with an area of consolidation. Then you break out and take the measured target of a bullish pennant. And if it was on the way down, it'd be a bearish pennant. That's why I keep getting that confused. That's, you take the impulsive move up, the flagpole, add it to the lowest point within the pennant, and then your buy signal comes on a breakout above there. And it should be an impulsive move. It usually is equally as impulsive when you break to the upside. So this is what bulls are looking for and probably expecting. And as I said, at most, if it pops up, I would expect it to fail or a downside break out of that pattern and move down. Now it has the potential to morph into a bull flag, which looks like this, and we'll get to in a second. Now, these were posted, you can see down here, was at 3:12 p.m. so about 45 minutes before the close. That was NQ, and we had the same thing on ES here. You can see it, nice clean pennant right there. There's your flagpole, that impulsive thrust up. So that's where I think we go, but it's going to be continued because we're going to roll in. Futures will stop trading here in a little while for the weekend, and then open up again Sunday night. So again, we'll have to see how this resolves. You're most likely not going to have it play out in either direction before we head into the weekend here. So that's that. Let's go back to the chart there. I think I was showing you ES a minute ago. This is NQ, and on NQ you can see the same thing. By the way, NQ are the NASDAQ 100 futures, E-mini futures. So there's our divergence line, forms this price channel. And again, the most important line, because divergence lines can be moved, they can be burned through. If we go much higher, we have roughly equal highs in the indicators on the NQ. But now you can see that flag has morphed. It's no longer a pennant. It may form a bull flag pattern here, but again, to be continued. Bulls want to see this. I'm expecting this. And your targets, like I always say, resistance on the way up once broken becomes support. So the same levels that we've been highlighting here recently, most of which had some reactions. Today we kind of paused briefly with one candle there and then powered on through that 73, 72 level. But in reverse, that should act, it should act as support, or could act as support on the way down. This would be the most salient level right now on the charts that I'm watching. And so next week, if we do get a pullback, that would be your first pullback target. And then of course that 72.95, that's a pretty big level there. All right, so that's what we look like on the futures. Let's get to the QQQ and SPY. I know most traders trade that. So here's SPY. Now this is a end of day chart, so we closed, trading's done for the day. SPY was up about 1% today. And you can see just a nice looking, now it's morphed into, at least on the SPY here, more of a bull flag pattern. That's a big one. Let me say it, one big ass flagpole. If you count that as a flagpole, you may want to just count that impulsive move up from yesterday's close, or a little bit below there. Again, that's what it would measure to, and it would take us up to or around the previous highs. But as I've been covering lately, 289, that was my magic number, my maximum bounce target, where I said I would scale into and continue to add to shorts, but not above that level. I'm really, again, more focused on QQQ. I'll get to that chart in a second, but SPY being the market, the broad market, it's certainly worth watching. And as I always say, whether I'm trading the small caps, mid caps, large caps, or even a stock like Apple, Intel, I will always keep an eye on the broad market and not just one index. I'm going to look at, and as far as large caps go, I like to watch SPY and QQQ. The Dow, you can watch that. It's 30 stocks, and again, you don't want to make things too complicated. So I'll keep an eye on those as far as the large caps go, and that's it. So the SPY hit the my uppermost bounce target of 289 today. Came within just pennies, basis points of that. I think the high was, what was it, 288.85. Close enough for government work there. So let's see if we get the reversal now. PPOs, no different from yesterday. We were pretty high, pretty stretched, pretty oversold, overbought, I should say, and we became more overbought at this point in time. So, as I said, overbought in itself is not a sell signal. We don't have any sell signals in the market now. Make that very clear. There are no sell signals, but there's two ways to, if you are looking to, exit longs and add shorts, which is what I've been doing the last couple days here. You can either do so on a sell signal, let's say a break of a bearish chart pattern or break below support, or you can do so on a bounce back to resistance. So nothing has changed on my longer term outlook, and this is the counter trend bounce that I was looking for, and heading into the lows here, and that's what we got. And so it's now gone to the point where we've got a pretty good short position, feel good about it heading into the weekend. We added back for the first time since the market topped. We've added back a Qqq Short Trade on the site. I won't share those targets here. It's an official trade, and actually that one, where last time we were doing more of a tactical trade. The plan on that last Qqq Short, after we broke this wedge here, was to swing down and capture a good part of the initial, what I thought to be an initial thrust down, get out, wait for a counter trend bounce. We didn't game it officially, but unofficially I made it very clear there's some long trades recently on the site, Apple, Intel, and a lot of setups and targets on QQQ. And so now this is what I'm leaning towards, but we'll see. Let's see how next week goes. Maybe we pop these flags on Monday and the market rockets up. Anything is possible. If there's nothing else this market has taught me over the years, is that anything is possible. So it's certainly a possibility. And as far as QQQ goes, I told you guys I would get to that. It's my preferred trading proxy for the indexes. And as I said, I will continue to add on there up to 183. There's that 182.93 is the exact number. We'll call it 183, but not above that. And at this point, anything above 186 is where it really just puts a big nail into the whole bearish scenario, because at 186, if you didn't catch my recent analysis, that's a big level on QQQ. If you look here, we had back in 2018, we had a double top in the Qs right there and there, two roughly equal highs before the big plunge, and so that was our all-time high at that point in the Qs. And then here we took it out, broke it, and then as expected, it was clearly priced in the charts, that breakout failed. And right after that breakout failed, that was bullish event number one. Actually, no, bullish event number one is we broke the uptrend line off the lows. That gave us a sell signal. Then when we broke down below the breakout to all-time highs there, that gave us a bull trap. That's what you call bull trap. The bulls pile in on breakouts to new highs, then they're trapped in, and we're still well below those highs right there. So again, while anything is possible, I did a video today, pretty extensive video for members, going over what I call the good, the bad, and the ugly. I gave you a lot of both sides of it, tried to be unbiased, showed you bullish developments. I showed you the RSI at levels not seen or last seen since the December 24th lows, and if you bought that RSI reading, that oversold reading there, this is what you got out of it. I certainly don't expect that to happen again. I would put the odds at less than 1% of a comparable rally, but again, anything's possible. Bullish PPO crossover. Last time we had a clean bullish PPO crossover was right here. By clean, I mean clean separation between the lines. And so, like I said, I can sit here at any point in time. I can make a case. You say, Randy, make a bullish case to buy or sell XYZ, and I can do that. But I tell you where I think things are going, and that's the way I'm leaning now. But like I said, the nice thing about, at least to me, about shorting this push up to those targets, you know, SPY hitting that level and being very close to QQQ and getting short, is the risk reward is very favorable. You know, on the Qs here, we have from where we closed today to that you know, stop out level. We do have, again, an official trade with a comparable stop. It's about what is that, 2.6%. In the downside, I won't even measure on this chart. The last time we had an official Qqq short trade, it was based off this 60-minute chart, because again, I was looking for something along these lines. Yeah, our final target was up here. We didn't catch every cent of it on the official trade, but again, we caught the bulk of it, and that's what trading's all about. Sometimes you can nail the highs and the lows. Sometimes I don't try to. It's just not worth trying to stay in it and again, get caught in something like this on the wrong side of this. So at this point in time, my focus is on the daily charts. You know, we zoom out here to the daily time frame, and you know, I'm looking for something like you know, like this, with a much deeper move down, at least a potential there. Let's just talk a couple other things. I've already mentioned this before. You know, this rally, if you're new to investing or trading and you weren't trading last quarter, or even if you were, you may quickly forget. So this is a powerful rally, right? 7.38% or so. I measured high to lows right there. You can see the pop-up box on the left. Look down towards the bottom in the green number, 7.38%. Well, here is our initial drop off the highs right there, back in off the October highs. 6.61%. Here is another counter trend rally that was about 10% there, and here was one that was about 10% there, and we went a lot lower. So run of the mill as far as counter trend bounces go, and I think I did this earlier for members. Throw up Fibonacci retracement levels. Let's do that now for you. Okay, this is QQQ. We'll do some quick Fibonacci retracements. You just take the previous major reaction high to a major reaction low there. We close right around the 50% Fibonacci retracement. Got intraday about halfway between that. By the way, they're to the left here, guys, on my Fib numbers. So you have, this is anywhere between 38 to the 61.8 is a typical counter trend rally. It doesn't mean you can't go higher. Sometimes you go much higher. Sometimes you even test the previous highs and then go down. But that's usually where they reverse, and so that's where we are today. And if we look at that first move down, here's the highs from 2018. There was our first kickback rally, came to right above the 50% as well. If we measure down to this reaction low, that one took us right in between, as you can see here, between the 50 and the 61.8. Again, the numbers are over here. And so on and so forth. So again, as far as rallies go, both in percentage, total gains and percentage terms, at this point it's no different from here. But as I did in the other video, I'm giving you good and bad. The good is that today this week we undercut the 200-day moving average, both the exponential and simple moving averages. You can see them here. I'll turn it up for you. They both come in together right around there. So we undercut it briefly and shot back above it. So bulls will cheer that undoubtedly. We did the same thing back here on that initial drop, undercut it, shot above it. Then we failed it again, recovered it one more time, failed it, recovered it. A lot of volatile trading, and finally just couldn't keep above it, and we fell. So that's another thing to note. So like I said, I can sit here all day long and tell you, show you some bullish developments, bearish developments, and at the end of the day, you can do one of three things. You can either take the long position and go long. I can tell you I wouldn't be buying this rally with your money right here. So I was buying it here and I was buying it here, but I won't buy it here. That's just me. We're very overextended in the very near-term charts, short-term charts. So we can certainly continue higher, but the risk reward, especially with so much resistance overhead, is not worth it. So you either go long, you short this bounce back into resistance, or if you're not sure what to do, you can stand aside and see what happens. We should have a good idea next week. What I really don't want to see next week, what'll frustrate me, if we just consolidate under that level and around here for a while and don't go anywhere. What I want to see is if we are heading a lot lower, this is just the exact type of rally that usually convinces the masses, the longs, the bulls, that it's safe to get back in the water, just like it did here, just like it did here, and probably there. And that's what you want to see. And so far, if you want to try to do this, completely agnostic, and not, just not go through a prism of a, bull or bear lenses, we have all the makings of a downtrend here. Let's just stop there. A downtrend is simply defined as a security making a series of lower highs and lower lows. Just like this was an uptrend right here. I'm not hitting all those highs and lows. That's an uptrend. This is a downtrend. When will this downtrend be in jeopardy? Well, first off, when we take out these previous highs right here, this reaction high from back in May. But until then, that's what we're looking at. And what would help firm up the case that we're going a lot lower? Of course, it'd be a break of this recent low. That's a big range, I know that, but that would give us, keep the current trend going. So again, for the bearish case, I would like to see a reversal at or very soon here on QQQ, and especially with SPY hitting that uppermost bounce target today. Okay, we'll keep it quick. We'll wrap it up here on the weekly chart. I just wanted to point out, because I would be remiss not to mention, I'm sure I've already mentioned it on the site a couple times today, but some people have missed it. I acknowledged in today's earlier video that we were almost certainly going to print bullish engulfing candles today. So that's something you'll probably hear about. And, we'll take it for what it's worth. There's certainly a bullish engulfing candle there. A couple things I said to it earlier. Number one, bullish and bearish engulfing candles, which, by the way, let me explain that for those of you not familiar. The body of the candle, which is the fat part, needs to engulf the entire body. It doesn't matter about the shadows, the skinny parts, but the body of a candle should engulf the previous candle. So when you have a bullish candle like that in green, then that's a bullish engulfing candle. Now, and when you have a red candle there, that's a bearish engulfing. Now you should use these, and I think they're like a lot of things in technical analysis. I think traders use them a little too freely. Bearish engulfing candles should come after an extended or prolonged uptrend, and that marks a potential reversal. And then what you want to see after a bearish engulfing is you want to see follow through to the downside, which we had here. So that was textbook check marks. It was pointed out at the time. Bearish engulfing candle and everything that followed, which was a big, major trend reversal there. Right now we do have a bullish engulfing, and yes, there's a downtrend, but it's not a prolonged downtrend. That's only four 4 weeks of selling before this week. So that's really just a correction. And I think I pointed out one over here. Yeah, it's to the left of the chart, but here's a bearish engulfing that was just in the middle of an uptrend. And you also want to use them, I like to use them in conjunction with other technicals. See, back here at that point in time, there weren't any sell signals on the market. Right here, when that one happened, we shorted. I pointed out the time. I had a trend line right here. Short. This is a weekly chart, but on the daily, we had this uptrend line, 60-minute chart. There was a wedge, divergence. When we broke it, we had a major sell signal there with that trend line break, the wedge break, and also coincided that week with the bearish engulfing. So we had more than one check mark, if you will, there. This is just a random bullish engulfing. It did happen to hammer off support. I'll point that out. I've had these levels on this weekly chart for quite some time now. 169.68. There's the reactions. There's some reactions there. Candles there. A couple candles there. 3 candles there from below. So a gap right there and a couple more candles. So we did hammer off support. And again, it was all, based on the 60-minute charts and everything else, a bounce was expected here. Now the million-dollar question, is that it? Is a correction over? Or was this just a part of a counter trend rally, maybe a little bit more with more downside to come? We'll see. Time will tell. You guys know my opinion, my thoughts, but again, I'm not going to be married to the short positions that I'm building back again if we go to new highs. Yeah, I showed you where I'll be out at this point. A little more upside where I may add a little more if we get there next week, early next week, and then not much more than 3% above that, I'm out. And I love those odds, 3-4% downside for what could be 20% or more upside. I'll take those odds any day. And then finally, one more thing to kind of once again put in perspective what's gone on this week compared to, I'll just use last quarter. When the market topped here in early October, we went down, you can count them, 1, 2, 3, 4 red candles. My candles are coded that if you close it, positive close for the week, obviously green candle, and a red close for the week from below the previous candle. Red candle means negative close. So we dropped 4 weeks and then we rallied. We had 2 green candles. So it's not, again, we were oversold. Again, that was talked about there. And you don't drop forever, especially on the initial thrust down. You don't, I don't think I can ever recall a waterfall type sell-off. Remember, the Qs were down almost 12%. I can't recall a waterfall sell-off that happened right off the highs of such a powerful rally. Tops are a process, and usually waterfall selling doesn't come till after you've had a couple kickback rallies. And it's those kickback rallies that, pardon my French, are a kick in the nuts to the dip buyers and the bulls. They buy them, okay, everything's good, we can get back in, the correction's over. One more time, we buy it. After that, they give up, and then you get the capitulation. So that's where we're at now, I think. But hey, who knows? Maybe you can see we pulled back. 200-day has been defended, but that's also something that I've noted. 200-day, I always said that was one major sell signal when that finally went on the weekly chart. It's a 40-week moving average, and we hit it. It's contained the uptrend for a long time, and it usually does. And then when you break below it, it's bearish, and when you get back above it, it's bullish. But the thing about it here, yes, we're back above it. We test it again. But usually, once you break it, you can get a few whips up and down. This happened back in 2007, and I pointed that out below. You get above it. But the fact that we broke it here and went so far below was unhealthy. What went on here, this is some insane, can't even explain. We didn't really exceed my max bounce target from back here, in the beginning of the year by that much. It went by, I think, a few percentage points, 3% or so above the, upper bounce target on SPY, but we really got ahead of ourselves here, and as such, I think the next downside move is going to be pretty powerful if we get it. So here's the things I'm watching for next week. Let's see if that green candle is wiped out. That would be very bearish, meaning we go back below this week's lows. You have the bearish crossover recently on the PPO that confirms the divergence right there. Let's see that stick. Otherwise, sometimes you get these whipsaw signals, and then you can the PPO can cross back over bullish, and that will probably coincide with a move up to new highs. But as of now, it's intact. The divergences, that confirms a negative divergence at this recent high, and that's about it. Let's just take it from there. Let's pick up next week if we happen to blast through those 60-minute resistance levels right here, 183 Qqq, and pretty much today's high, or yeah, today's high is 189 on 289 on SPY. Maybe something else is going on, especially if we hold it. Now, I'm not talking about a pop in the morning. Like I said, these flags, I could easily see them start to play out. Sometimes you'll get these perfect looking flags. You see a lot of traders pile in only to see it suddenly reverse. And if that does happen, by the way, guys, that's very bearish. I've seen that happen before, where you have a breakout, impulsive buyers coming in, and then it gets sold into aggressively. So if you sell, what you can do, if you're bullish, take the breakout if you want. That's what TA 101 says, take the breakout of a bullish pennant or a bull flag. But then have your stops below the flag in case it reverses. That way your risk reward is small. Again, it's always about risk reward. Take it. Maybe you're going to have that flag will play out to the full measured target. And if you're wrong, then you don't lose that much. However, if you're a short side trader or looking to get short, I'd jump all over that if you see that failed breakout of those flags. Or if they just fail to even materialize, that's pretty bearish too. It's such a clear, visible bullish chart pattern, that consolidation after a big run, that if it fails to play out, that's also pretty bearish too. All right, we'll end it here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.